Good afternoon, everybody. Our apologies first off for our late start, but welcome to Zeifmans Non-Resident Digital Event Series Technology and Startup Edition, Expansion and Innovation, co-presented in partnership with Zeifmans and Abelovich, Polano, Asociados S.R.L, Nexia. So before we begin, just a few cleanup issues. If you have any questions, feel free to ask them throughout in the participant feedback section located on the lower left hand of your screen. Both Naomi and Ahmed will be answering all of your questions, or as many as we can, at the end of the presentation. Also, we'll be circulating a copy of today's webinar to all of you post-event, along with this morning's interviews that we hosted on our Zeifmans Instagram channel. So, our agenda for today, we're going to be introducing you all to Abelovich, Polano, and Asociados S.R.L. Nexia. A quick introduction to Zeifmans, a little bit about Nexia International, the non-resident technology and startup companies expanding into Argentina, which will be presented by Naomi from Abelovich, Polano, and Asociados, and the non-resident technology and startup companies expanding into Canada, presented by Ahmed from Zeifmans, and then again we'll be wrapping up with Q&A. So a little bit about Abelovich, Polano, and Asociados. They're located in Argentina. They're a full-service audit, tax, outsourcing, and consultancy firm based in Buenos Aires. Their services include tax planning, restructuring, due diligence, transfer prices, and transaction services, providing support to foreign investors. They've been practicing for 35 years, experiencing and assisting local and foreign investors. They're made up of 100 local team members, 5 partners, and one of the top 20 audit firms in Argentina. And a little bit about Zeifmans. So Zeifmans is a full tax accounting and consulting firm based in Toronto, Canada. Zeifmans is actually one of the top 20 firms in Canada based by revenue. Our services include business advisory, valuation, corporate finance, transaction services, corporate turnaround and insolvency, and estate and succession planning. We've been in business for 60+ years, and we have experience in developing innovative financial tax and accounting solutions driven by creative insight to help guide entrepreneurs. And a little bit about Nexia. So those of you who are not aware, both Zeifmans and Abelovich are members of Nexia International, which is one of the top 10 accounting firm associated firms in the world. So my apologies, it's one of the top 10 global networks of accounting and consulting firms in the world. For 25+ years, Nexia International has ensured that all member firms meet and maintain high quality control and standards. They create opportunities for you and your business to grow internationally through partnering with our affiliate Nexia firms operating in 122+ countries around the world. So now we're going to be moving on to our Abelovich and Polano and Asociados non-residents expanding into Argentina. And I would like to formally introduce you all to Naomi Cohen, who's a certified public accountant and is a partner at the firm. Naomi is based in Buenos Aires. Her main clients include local subsidiaries of foreign companies, mainly in the U.S., Canada, and Europe, and companies listed in the local stock exchange and in the U.S. Participant in multidisciplinary teams for due diligence processes in Argentina, the U.S., and Central America. She is also advisor for corporate structures, mainly focused in the mining industry and in service companies. And with that, Naomi, take it away.
Good afternoon. In this presentation, we will cover the main topics which could be of interest considering Argentina as an alternative either to do business or to retire. Please note that the following is, to some extent, a general presentation, with main focus on those items that we believe will have a positive impact when planning to do business in Argentina. For specific data or for detailed advice, we suggest to contact us. We will be glad to expand on any specific matter or to help you customize your needs into opportunities. What we will be covering. The agenda has been prepared to provide an overview on certain issues that we understand are important to cover. We will go through the following matters: general facts about Argentina, corporate and business structures, what you should be asking when considering doing business in Argentina or when planning to move residents to Argentina, employment issues, funding operations in Argentina, tax implications. And after this initial overview, we will focus on some industries and activities which could be of special interest, such as Argentina, a service provider for foreign entities, promotion of knowledge law, mining industry. In this industry, Canada companies are among the main investors in Argentina, foreign residents in Argentina, and their tax impact. Some facts about Argentina. Argentina is an emerging market with plenty of opportunities, but challenges even for the most experienced investors. I like this slogan to better understand our country. As you may note, stability has not been a strength of Argentina's economy. Therefore, investors should be prepared to react and to adapt to continuous changes, as business climate may be very volatile. Argentina is located south of South America. Overnight flight from Canada, USA, about 11 hours. 1 to 2 hours time difference with East Coast Canada and the USA. Being in almost the same time zone is a significant advantage when dealing with people, and this fact facilitates the communication process. The official language is Spanish. However, English is widely spoken from a business standpoint. The currency is the Argentine peso. The rate as of the end of September 2020 was the official around $81.80 pesos, $1 American. And the free stock exchange rate was September 30 around 140 pesos, $1. To be considered that as of today, the rate indicated for September 30, 140, already raised and is around 150, 160. Expected inflation rate for the present year will be above 40%. Argentina has suffered constant high inflation rates for the last 70 years and also suffered two hyperinflation processes. Prices in the economy are stated and shown in local currency, Argentine pesos, but both individuals and companies save in foreign currency, in US dollars. It is popular saying that every local citizen is an expert economist because of her training and management of the effects of high inflation and devaluation. For Argentine people, I may say that inflation is part of the local country culture. We are used to live with it. Our population is around 45 million people, 1/3 living in Buenos Aires and the bigger surroundings. Argentina has a long history of immigrants covering the last 100 to 120 years, mainly arising from Europe. Mainstream of immigrants came to the country before World War I, through the end of World War II. Main countries where immigrants came in the early to mid-90s are Spain and Italy, and to a lesser extent UK, Germany, and certain Eastern Europe countries. On the other hand, immigration in the last 40 years came from neighboring border countries like Uruguay, Chile, Paraguay, and Bolivia. Argentina has been a democracy since 1983 with presidential elections every 4 years. Argentina has, in the business environment, high literacy rates and high quality education standards. Regarding corporate and business structure, set up a permanent establishment in Argentina, versus a foreign branch. And talking about the benefits of having an Argentinian subsidiary versus directly operating as the branch. When setting up a permanent establishment in Argentina, a subsidiary or a branch will ultimately be dependent on several factors to be evaluated, such as flexibility in terms of the decision-making, the direct involvement of the management and the control of the operation, the tax effects and its impact, certain legal requirements defined at the home office level, and the type of operation. Transforming a company from one category to another, which would be from a company to a branch or between some companies, is almost always possible. However, it is highly advisable to determine the best company structure at the time of business startup. An important factor to be taken in consideration is the purpose of the investment and the likelihood of transferring in the future the investment to a third party. In the mentioned case, Argentine entity will be more flexible than a branch, which should be transformed into a company before being transferred or being sold to a third party. Corporate and business structures. Which fits best? Companies organized as corporations or LLCs are ultimately represented by their shareholders or their partners respectively. Sometimes corporate legal counsel represents home office for the shareholders or the partners, mainly at the shareholders meeting. Also, for a corporation, a board of directors is at the top of the legal structure, while one or several partners at the top of an LLC. For a branch, an attorney, in fact, we call it apoderado, represents home office designation. Depending on the amount of its capital stock and the type of organization structure, a statutory auditor or statutory audit committee may be also required. A quite new structure in Argentina is allowed as a company with only one shareholder, Sociedad Anónima Unipersonal. For foreign companies, this structure could be favorable since only one foreign shareholder has to be registered in Argentina. The foreign shareholder or partner has to be registered, even the branch, before the local government entities when establishing the local company. It is usual that due to time constraints, an Argentine company is set up by locals, lawyers or accountants, who transfer it to the foreign investors once the foreign investor completes the registration process. What you should, as a foreign investor, be asking? What structure works best from a legal and tax, including Social Security tax perspective? We already went through the kinds of structures and will give an overview on taxes in the next slide. Which returns should I expect? This will depend on the industry and will be very different if investment is focused on being a service provider where the target is to build an inexpensive working force, or in the mining industry where long-term returns are expected. What should I know from the political and economic situation in Argentina? As already mentioned in the introduction, devaluation, including different exchange rates for the US dollars or any other foreign currency, and domestic inflation are key issues. What are my short and long-term goals? This should be determined before starting. What happens if I sell my business in Argentina? Capital gains are taxed in Argentina at a 15% rate. Who will represent my business in Argentina? Due to the long-standing history of economic instability, for the day-to-day operations, local managers should be involved. The foreign investor should always be supported by a local legal counsel, accountant, bookkeeper, and local tax custom consultant. Additionally, majority of the board of directors, in case of a shareholder company, has to reside in Argentina. Funding operation in Argentina. Raising capital. How to finance Argentina operation. Equity versus debt. There is not a developed capital market in Argentina. Therefore, most of the financing should come either from company headquarters under capital stock or as debt intercompany accounts. Financing in domestic currency in pesos is to some extent possible from local vendors and local banks, but interest rates are often very high. The inflow and outflow regulations vary constantly. It is very important to get the proper advice so that the exchange rate applied for the capital contributions or for outflows is the most favorable. Converting foreign currency to Argentine pesos, difficult to explain. Although there is an official exchange rate for commercial transactions, imports and exports, also applicable for financing loans and accounts, due to the lack of reserves and exchange restriction, an alternative currency market rate has been developed for certain transactions, mainly financial inflow or outflow of money to and from Argentina. It is a financial market developed using Argentina's dual currency, bonds or shares that quote locally and abroad, which can be bought abroad in dollars and later sold in the domestic market in pesos, this for the inflow, or vice versa, both locally in pesos and later sold abroad in US dollars, the outflow. And transfer pricing consideration. A transfer price system is in place with annual reporting. Comparable price system is widely used. We will hear more about the transfer pricing when going to the tax impact. Employees' issues in Argentina. Employer has to pay Social Security taxes, which approximately represents 25% of the gross salary, including healthcare coverage costs. The employee is subject to withholding on gross salary of approximately 17%, breakdown in 14% for pension plan and 3% for healthcare. Income tax is applied through withholdings on net salary on a progressive rate up to 35%. Several payments in case of dismissals without a valid justification are determined as 1 month per service year, but has been increased in 2020 to 2 months per year of service in order to avoid dismissals due to COVID-19. The double payment penalty is so far valid until end of this year, but could be extended. Stock options are subject to Social Security taxes and income tax as detailed above. Stock plans for local employees are not very frequent, but are considered part of the employee's package compensation and therefore subject to taxation when collected by employees, regardless where compensation is paid locally or abroad. Also, housing, schooling, and representation expenses reimbursements are part of the employee integral compensation. Let's go over to taxes. Which tax filings are requested for the entities? Annual income tax requests. Advance payments, if applicable, are paid on a monthly basis. VAT returns, which have to be filed monthly. Turnover tax returns. Turnover is also called gross income tax. Monthly determination and an annual percentage allocation among jurisdictions. Payroll taxes returns. And annual transfer prices presentation. This is applicable for entities with international intercompany transactions. Covers operations such as exports, imports of services and goods between same group companies. Also applicable for interest on loans granted, management fees, and intercompany, all kinds of intercompany services. Exports. For exports, withholding tax apply, which is a 35% on presumptive net income. Presumptive income is for most services 90%. Hence, the net rate is 31.5% on export of services, for example. International tax treaties applicable for some countries apply, including Canada. Exports are not subject to VAT and turnover tax. Return on VAT credit originated in local acquisitions or imports, both related to exports, are subject to refund. For individuals, they have to file an annual income tax return. Also, annual tax returns on assets, which we call impuesto a los bienes personales, raised significantly in the last years, up to 1.25% on assets located in Argentina and 2.25% on assets abroad. Taxes applies regardless of the gains, if any, related to the assets. The international treaties. Canada's tax treaty with Argentina reduces the applicable withholding tax rate to rates between 12 and 18%, depending upon the nature of the payment. Main taxes applicable in Argentina are income tax and VAT nationwide, and turnover tax, also called gross income tax. This on a provincial wide. Income tax for entities, applicable rate is 30%, but plus a 7% of tax on dividends when distributed and paid. For individuals, the scale slides from 5 to 35%. Turnover taxes, the gross income tax, vary per jurisdiction, per province, and also depend on the kind of activity, and are usually between 1.5% or to 6% on the gross revenues. If operating in different provinces, allocation of revenues and costs have to be applied to determine the percentage to assign to each province. VAT general rate is 21%. Reduced rate of 10.5% is applicable for IT goods and for groceries mainly. VAT is not applicable on exports, but applicable on imports being recoverable the month after payment. Let's talk now about Argentina, a service provider for foreign entities. It is very frequent that foreign entities start their business in Argentina receiving services provided by local freelancers. This happens mainly in the software development and e-commerce business. They then decide to set up a permanent establishment to employ the former freelancers. Why that? Main reason is avoiding social security contingencies. The permanent establishment, which operates under any of the mentioned structures, usually has as only client a foreign intercompany, and does not have direct relation with the actual clients for whom the work is performed. Main services locals provide to foreign entities are call centers, software developers, and design and marketing, mainly related with the e-commerce business. Investing for the development of service companies could be favorable due to the broad availability of talented resources, relatively low payroll costs, the existence of good language skills, and local quality education standards. Many global companies have determined these matters as an incentive to build and develop their global shared service centers and their technology centers in Argentina. As a general rule, these centers operate under a cost-plus basis scheme. Under this scheme, actual costs incurred plus a determined percentage are invoiced to the parent company which requests the service. Percentage determined should be applied based on an arm's length criteria supporting transfer pricing rules. Pros of having a service, Argentina as a service provider: well-prepared workforce, the communication, convenient time zone compared to India and Eastern Europe, and the competitive payroll and maintenance cost. What we should mention as a cons may be the lack of a political and economical stability and difficulties for repayment of tax credit and access to the US dollars at an official rate. Proper advice should be needed in these aspects. Promotion of knowledge, the law. That's a law which is quite new, has been just approved by the Congress during the last week, and is in the way of being implemented, providing opportunities mainly for small to medium-sized companies in the technology and knowledge sectors, with some special tax benefits to be granted to companies with the issuance of fiscal bonds incentives, tax stability, and reimbursement of social taxes. Benefits are larger when hiring additional workforce, increasing level of exports, and being small business. Here you will find all the activities included in this new law, which is mainly focused on IT-related items, software, computer, and technology services, and different kinds of science. There are three main requirements established by the new law. 2 out of 3 of the requirements have to be met. Proof continuous improvement, minimum establishes investments for training and for research and development, and increase in exports. Which are the main benefits granted? Income tax rate reduction, elimination of VAT withholding on exports, and 10 years of tax stability. Okay, we already went through Argentina service provider, then we got to know the new law for promotion of knowledge, and now we want to present the mining industry in Argentina, which is where Canada is a very significant investor. The business are usually established by foreign investors in Argentina as corporations, shareholders company, which we call Sociedad Anónima, or as an LLC, which is a limited liability company, which we call the Sociedad de Responsabilidad Limitada, with a tax profit base. Main mining investment in Argentina have been for gold, copper, and silver. And in the last years, lithium has become an important player. We include here a map where you can see the different metals. Argentina is at present the fourth producer of lithium and counts with resources to become the first one. We include this map where it is indicated where the main mining resources are, all along the Cordillera de los Andes, the Andes Mountains, which cover all the country on the west side. Chile, which is here, the neighboring country, on the other side of the mountain chain, is also very active in the mining industry. And some of the projects are done together. To get advantage of tax benefit, investors should get registered at mining law. This law grants benefits for mining projects, mainly tax stability, reduced income tax rate, and tax refunds on VAT. To comply with registration requirements, the investors have to file a complete disclosure of their investment plans. There are many Canadian companies investing in local mining projects. The parent companies are usually listed as junior company in Canadian stock exchange. Other relevant foreign investors in the mining industry are Australia and recently China. And to finish, the foreign residents in Argentina and their tax impact. Foreign residents planning to live temporarily or permanently, like retiring in Argentina, have to consider their pros and cons. Cost on living measured in foreign currency is fairly inexpensive, like food, transportation, rental costs, and health plans. Health coverage and private medical dental care are of very good quality. Same holds true for private education at both high school and university levels. The weather, we have good weather, is mild in most regions of Argentina. Consideration to be made by evaluating to become an Argentine permanent resident are certain tax issues, such as being taxed on worldwide assets and revenues, being the rates, as already shown, considerably high, especially on assets held outside Argentina. So, on one hand, the pros are, it's very cheap to live in Argentina, but some activities or some assets are very highly taxed to be evaluated. With this, I finish the presentation of Argentina, and we'll be back with you with the questions and answers and go over to, let's have the presentation of Canada.
Hello, everyone again. Now we are transitioning into Zeifmans' portion of the presentation, non-residents expanding into Canada, presented by Ahmed Aslam, who's a partner at the firm. So a little bit about Ahmed. He has over 20 years of experience in developing and delivering innovative and forward-thinking solutions relating to setting up tax-efficient corporate structures, evaluating acquisitions and dividends, cross-border investments, non-resident and international tax, and estate and succession planning for clients in a variety of industries, including distribution, manufacturing, construction, and technology and startups. And with that, I would be passing the presentation on to Ahmed, who will be walking you through what it's like for a startup to expand into Canada. Ahmed?
Thank you so much, Kelly, for the nice introduction. Thank you very much, Naomi, for your very insightful presentation about Argentina. I would like to essentially present the other side of the same presentation for the non-residents who would like to expand into Canada. And I would like to touch upon some of the treaty implications which Naomi mentioned in her presentation as well, with respect to Argentinian entities who would like to expand into Canada, what kind of tax regime they are looking at. So in terms of the agenda, we will quickly go through the corporate structure which are available for non-resident entities to expand into Canada. And we would also talk about how would you like to fund your operations in a tax-efficient manner. There are certain restrictions around the kind of financing being used for your Canadian subs. We'll go over that quickly. There are some other issues which I would like to highlight. Sales tax or akin to value-added tax. And we will also talk about the income tax compliance. And I would like to highlight the SHRED, or Scientific Research and Experimental Development Credit Regime in Canada, which incentivizes R&D development in Canada. And then we will talk about employment-related issues if foreign parents are sending their employees to work on their projects in Canada, or if they are hiring employees in Canada, what are the issues they have to be aware of, and what kind of costs are involved. And lastly, we'll briefly touch upon the real estate issues. Canada has been becoming a significant market for foreign investors to buy real estate. And we would like to just go over some of those issues which you should be aware of before you decide to invest in Canadian real estate. So let's start with our first slide, which talks about the kind of structure which are available in Canada for non-resident corporations who are thinking of expanding operations here. As Naomi mentioned, the first option would be, would you not worry about incorporating in Canada and just carry on Canadian operations as a branch of a foreign company? It's not a separate legal entity. It's just a division of a foreign entity, which is essentially carrying on Canadian operations. And then the other option you have is to set up a Canadian corporation in Canada, and the other two options which are sometimes used is to set up a partnership in Canada and joint venture. I would like to quickly contrast Canadian branch and Canadian corporation, just so that you can appreciate the complexities involved and the benefits of using one over the other. But let's go to the next slide. These are some of the questions which are helpful in determining what structure might work for you. So any foreign company thinking of expanding into Canada, I would like to ask them, what are their goals and objectives, and what is their timeline in terms of their investment in Canada? Is it a short-term venture? Is it a long-term strategic decision on their part? And are they hoping to continue operations in Canada, or are they going to just do one particular project and after that they're going to wrap up? So all of these are important considerations before deciding if you should have a Canadian branch, Canadian company, or a partnership or joint venture. Usually speaking, if you are operating in Canada, if you are carrying on business in Canada as a Canadian branch of a foreign sub, any profits earned in Canada by that Canadian branch are subject to tax in Canada. We'll talk about the treaty implications in a couple of minutes, but I just want to give you a high-level overview of what happens with respect to branch versus a Canadian corporation. So a branch is going to be reporting its Canadian profit and paying tax on it just like any other Canadian entity would. And on top of that, there is this branch tax, which essentially is uninvested. Any profits you earned in Canada, but they are not invested in Canada, or you have extracted out of Canadian operations, Canada imposes a branch tax. A general rate of 25% is applied on those profits. However, that gets adjusted by the treaty rates. Essentially, that branch tax brings you at par with another scenario where you have a Canadian sub and it earns income in Canada, it pays taxes, and then it pays dividend to the foreign parent, and it pays withholding tax on those dividends. So the purpose of that branch tax is to put you on equal footing, regardless of how you are operating. The total tax burden should remain the same. However, the branch does invite certain other complexities because you are supposed to maintain separate books and records of all of your Canadian activities. Some of the expenditures which are general in nature, head office, general and admin kind of expenditures, it becomes a matter of judgment how much of that belongs to Canadian operations and how much of that belongs to foreign operations, and any allocation is then subject to a revision or review by Canadian tax authorities, which in certain instances may bring your foreign operation subject to Canadian tax authorities. On the other hand, if you are just operating through a Canadian entity, the Canadian entity is only reporting profits earned by itself. It's not reporting any profits earned by its foreign sub, and things are much simpler. It pays taxes on profits earned in Canada. Any dividends paid out to foreign sub is subject to withholding tax rules, which again gets adjusted by Canada-Argentina tax treaty, and we'll talk about those rates in a few seconds. Okay. Now, in terms of the Canadian tax implication, it's essentially based on the residency of the taxpayer. And the residency of a taxpayer is, even though we have some specific rules, but it's mostly a question of fact. If a taxpayer is resident in Canada, then it will be subject to tax in Canada on its worldwide income. And if a taxpayer is determined to be not resident in Canada, but it's carrying on business in Canada, then it's only subject to tax on its Canadian operations, Canadian profits, and any gains on the sale of taxable Canadian property. But the rest of the income earned outside of Canada will not be subject to Canadian taxes. That also brings me to now this concept of permanent establishment and carrying on business. Both of these concepts are important in determining your Canadian tax obligation. So permanent establishment is essentially a fixed place of business in Canada. It can also, you can also create a permanent establishment by virtue of having an employee and an agent in Canada who has the authority to execute contracts on the behalf of the parent. If you have a permanent establishment in Canada, then all of your Canadian profits are subject to tax in Canada. On the other hand, if you're earning business profits in Canada without a permanent establishment, such as you are shipping goods to Canadian customers, but you do not have any office or an agent in Canada, you may have a warehouse, a third-party warehouse location where you ship the products to that location, and you're collecting orders through your website, and then you're directing your third-party warehouse staff to ship those products to the customers in Canada. You may not be subject to tax as a result of merely just having a warehouse location in Canada. So those carrying on business in Canada and permanent establishment are important concepts in determining your obligations to pay tax in Canada. And in terms of the Canadian entity versus foreign branch, we talked about that. There are a few things I would like to highlight here. There is this concept of Canadian-controlled private corporation, which essentially affords you a preferred tax treatment if you meet that definition. In order to be a Canadian-controlled private corporation, you have to first meet the definition of a private corporation. A private corporation is essentially a corporation resident in Canada, which is not a public company or not controlled by a public company. If you are a private corporation, and then the second part of that test is that it's not controlled by a non-resident of Canada, then it will meet the definition of Canadian-controlled private corporation. Just to give you an appreciation of the difference in the tax rate, a Canadian-controlled private corporation pays tax on its first $500,000 of profit at about 12.5%, versus a general tax rate for corporation carrying on business in Canada of 26.5%. So there are certain ways of setting up a Canadian operation in a way that it allows you to meet that definition. And if so, you can have a very attractive tax rate. We already talked about benefits of having a Canadian subsidiary versus directly operating as a branch of a foreign parent. In terms of the actual taxes, the Canadian sub pays tax at a general rate of 26.5%. And branch will also pay tax at the 26.5%, but then it will also be subject to branch tax, which the general rate is 25%, but under Canada-Argentina tax treaty, it's reduced to 10% or 15%, depending upon the extent of ownership. If an Argentinian parent owns more than 25% of Canadian operations, then the tax on dividends or branch profit is reduced to 10% under the treaty. Otherwise, general rate of 15% applies. Now, I would like to talk a little bit about raising capital and funding your Canadian operations. Unlike Argentina, we do not have significant restrictions in terms of capital inflow and outflow. However, there are certain tax implications of how you fund your Canadian operations. The thin cap rules in Canada essentially limit your ability to deduct interest if the debt-to-equity ratio is more than 1.5 to 1. And any extra interest which you have paid to your foreign parent would deem to be a dividend, and then it's subject to a dividend withholding tax regime, as I mentioned previously, from 10% to 15% under the treaty. So not only that the deduction is not available, you are deemed to have paid a dividend to your parent, and you are required to withhold 10 to 15% of that dividend and remit it to the Canadian tax authorities. In terms of the profit, Canada-Argentina tax treaty reduces the taxes on dividend, as I mentioned, from 10 to 15%, and any interest paid to foreign parents subject to thin cap rules is subject to 12.5% withholding tax if it's a related party debt. And I would just briefly mention, if there are any technologies being licensed to Canadian sub and you are charging royalties, the tax rate on royalties under the treaty is from 3% to 15%, depending upon the nature of the underlying technology being licensed, or if it's a trademark, IP, copyright, things like that. Now, I would also want to spend a couple of minutes here to talk about the transfer pricing consideration. When you are dealing with a foreign sub, the transfer pricing regime essentially would like you to deal with the foreign parent. Canadian tax authorities would like you to deal with your foreign parent essentially on arm's length basis, even though you are at a non-arm's length basis. You are connected to them, so you can influence the cost or the fees being charged. So you have to make sure that you are charging those fees essentially on arm's length basis. anything which would deem to be not an arm's length pricing would then adjust it to be an arm's length pricing. Let's talk about some tax implications for Canadian operations. I've already talked about the rates which are applicable. A general withholding tax rate in Canada is 25%, which is adjusted by the tax treaties, and in case of Argentina, the rate is between 3% to 15%, depending upon the nature of the payment. Canada also has a value-added tax regime, and unfortunately, rules can be very complex. Each province can have its own provincial sales tax. On top of it, we have a federal general sales tax, GST, which is 5%. And some provinces, rather than administering their own PST, they harmonize their tax regime with Canadian federal tax sales tax regime. And in that event, you have an HST as opposed to GST or PST. And then we have one province which imposes its own, which has its own tax regime, Quebec, and and you are subject to QST, which is 9.975%. Most of the PST rates vary from 0% to 10%. HST rate is 5%, GST rate is 5%. And if those provinces are harmonized with federal rules, then the HST rate can go as high as 15%. In terms of registration and exemptions for the sales tax purposes, for a non-resident entity which is carrying on a business in Canada and is providing taxable supplies in Canada, they are required to register unless they meet the exemption. And the exemption is essentially, if either you are a very small supplier, your gross sales are under 30,000, or you are engaged in selling products and services that are zero rated or exempt from GST, such as financial services and healthcare services. The non-resident security is applicable to non-resident GST, HST registrants. It starts around $5,000 and it can go as high as $1 million. It's essentially a function of your expected net profit in Canada. And that security is essentially there because you're carrying on a business as a non-resident, and tax authorities do not have a way to ensure collecting the tax at the end of a process. So they force you to provide a security that at the end of the process you will be filing the return and remitting the tax. The other tax compliance requirements in Canada are for companies. There is a requirement, regardless of their taxable status. If you are incorporated in Canada, you are subject to tax filing. Even if you're carrying no operation, it's essentially a dormant entity, or there are no profits and you just have losses, you still have to file annual tax returns. You also have to report certain transactions with connected non-resident entities, and any payments you are making to non-residents. In addition to withholding tax requirements on those payments, you are also supposed to file an NR4 return, which summarizes any payments made to non-residents, any withholdings against those payments. And if you have employees in Canada, you are required to register under the payroll tax regime, and you are supposed to withhold and remit certain taxes to CRA. We'll talk about that in a couple of minutes. And if you are charging HST in Canada, then you are also required to file the HST returns or GST returns at the end of your reporting period. The annual returns are due within 6 months of year end. Whatever is your fiscal year end, within 6 months of that, you have to file the annual income tax return. And our 4 filings are due 90 days from the end of the calendar year. Payroll returns are due end of February. HST returns are due depending upon your registration. If you're annual filers, then you are supposed to file within 3 months of your end to the HST returns for that period. Now, one of the very generous incentive program Canada has is for any R&D being carried in Canada. Each year, there is about $3 billion worth of R&D incentive which Canada provides to approximately 20,000 businesses which are engaged in R&D work in Canada. The rate, the tax refund or the credit rate is about 35% for Canadian-controlled private corporations. 35% of their eligible R&D expenditures, they get back as a refundable credit. That means even if you do not have any profit in Canada, you are still getting a refund because you are doing eligible R&D in Canada. And eligible R&D activities essentially are, if you're doing some kind of experimental development, if you're doing some applied research, and any associated support work for R&D. All of those are considered eligible. The kind of expenditures which can be claimed against the R&D credit are essentially salaries and wages for the people involved in R&D work, any consultants you have hired who are helping you with the R&D project in Canada, and any overhead directly connected to your R&D activities in Canada. The basic calculation of that essentially is you take your eligible R&D expenditures and apply the applicable refund rate. But just to give you a high-level picture of how these programs work, let's assume that you have spent $100,000 in salaries and wages for people who are engaged in R&D work in Canada. Then, in addition to the salaries and wages and the contract costs, you are allowed to add all of the indirect costs, support services being consumed by R&D operations in Canada. And you have the option of either using a traditional method, which is identifying those costs directly related to R&D, or you can apply for an proxy method, which essentially gives you a fixed rate as a percentage of the salaries and wages to add it to your total R&D expenditures. So in my original example of $100,000 of salaries and wages, the proxy method can give you a variable R&D cost of somewhere between $65,000 to $55,000 on top of your salaries and wages. So your $100,000 of salaries and wages in Canada can entitle you a refund of about $65,000. So as you can appreciate, it's a very generous program, and which essentially incentivizes companies to do R&D in Canada. Now, in order to claim the credit, you have to file a SHRED return, which essentially is a two-part form. You have to provide some general information about the company, about the people involved, and what kind of work you were trying to do. And then you have to provide a little bit more detailed description of the work being done, what kind of technology you were working with, what technical improvements and uncertainties you were dealing with. And the due date of this return is within 18 months of the year end. So you have a lot more time to file this return. So sometimes, even though you are past the due date of the income tax filing, you still have the ability to go back and file an R&D return for the period. Recently, CRA tweaked the program a little bit. Now they've fast-tracked your application for R&D, claim if you file the return along with your income tax return, which, as you recall, the deadline for that is 6 months. So we encourage our clients to file the R&D claim along with their income tax filing so that they can quickly access those funds. And it's particularly beneficial for startup companies, which are usually cash-strapped, and this allows them to have access to certain funds without having any significant sales. Now, lastly, I would like to talk about some employment-related issues. Canada, as I mentioned early on in my presentation, taxes you based on your residency, not your citizenship. So you may be subject to Canadian tax based upon your residency status. So it's not uncommon for employees of foreign parents who've been here for a certain period of time and who have established some ties in Canada to be considered resident for tax purposes and be subject to tax on their worldwide income. If you are employing, regardless if you're a resident or a corporation or non-resident corporation, if you are employing people in Canada, you are required to register under the payroll program, and you are required to withhold income taxes and employment insurance, Canadian pension plan remittances, and employer health tax remittances. In addition, in certain situations, WSIB, which stands for Workplace Safety and Insurance Board, insurance also is applicable. Just to give you a basic idea of the tax rate, personal tax rate in Canada starts from somewhere around 20% and go as high as 53.5%. CPP rates are 5.25% of your gross payroll in Canada, subject to a maximum amount of $2,748. And EHT rates are around 1.58% of the payroll, subject to a maximum amount of $856. And if total payroll in Canada exceeds $400,000, then EHT is applicable at 1.95% of your total sales. Sorry, your total salary. And WSIB rates vary quite a bit based on the nature of work being performed, for a manufacturing operation versus somebody providing the services. The rate varies based on the risk involved. Now, as I mentioned, regardless of the fact that you have, your Canadian branch or Canadian company, as long as you're employing people in Canada, you are subject to payroll requirements. And if you have employees who are directly employed by the foreign parent, but they are providing services in Canada, you are also subject to the payroll tax regime here in Canada because those services are being provided in Canada. There is a general exemption available depending upon how much time they are spending in Canada. Usually, if within a calendar year they are spending less than 45 days, or in a consecutive 12-month period they have spent less than 90 days in Canada, you may not be subject to that. And then just a heads up, if you are paying foreign contractors who may not be an employee of your corporation, but they are arm's length contractors, but they are providing services in Canada, then again, Regulation 105 withholding kicks in, and you are required to withhold 15% of any fees, commission paid to those contractors. Now that brings me to my last slide. As I mentioned early on in the presentation, the Canadian real estate has been becoming a very attractive investment for a lot of non-residents. I just want to point out that you have to consider several issues before you decide to invest in Canadian real estate. There may be a more beneficial structure depending upon your objective, depending upon your timeline, Should you own that Canadian real estate through a Canadian company? Should you own it through a partnership? Or should, in certain instances, it actually makes sense to own it through a foreign company directly? Canada does have certain taxes associated with the real estate transactions, such as property taxes, land transfer taxes, and very recently, as a result of a lot of foreign speculators trying to invest in Canadian real estate, some provinces have instituted non-resident speculation tax. In Ontario, it's around 15%. The land transfer taxes are somewhere between 0.5% to 2.5% of the value of the land. So I just want to caution that if you are thinking of investing in Canadian real estate, you want to consider the right structure on the start of that investment, because sometimes moving real estate between different entities can actually invite certain taxes. So it's advisable that you have the right structure in place at the onset of that decision. And also the applicable tax rates based upon the nature of the income earned change. If you're earning rental income versus the real estate is being used in active business, the applicable tax rate might be different. So that brings me to the end of my presentation, and I will be happy to answer any questions you have about any of the issues I discussed in my presentation, or if you have any general questions about Canadian taxes or non-residents investing in Canada, please feel free to post those questions in the chat window below, and we will be happy to answer those. Thank you.
Thank you, Ahmed, for that. It was great. And Naomi is coming back on for our Q&A portion. But before we move on to audience questions, I have a question actually for both of you that came out of the interviews we were doing this morning on Zeifmans Instagram Live. One of the key themes that I noticed that came out was a lot of our thought leaders were stating that even though it is COVID-19 and it's a scary time and we don't know what's happening next, but now is the time more than ever to begin your startup, like make that leap, take those risks. What are your thoughts on that, Ahmed? And what are your thoughts as well, Naomi?
Excuse me, taking risk, can you repeat the question slowly?
So one of the main theme that came out of our interview session this morning was for startups, even though we are in COVID-19 and again, it's a scary time,
okay.
But now is the time to make that risk.
Yeah,
make a risk, make a move, and begin your startup. What are your thoughts around this idea?
It's hard to say. Maybe it's a good time to take the risk and make a startup because it could be inexpensive. Talking about Argentina, if you make a foreign investment in Argentina at present, as already mentioned throughout my presentation, although we are facing a big instability, at this time you need not too much dollars to invest a lot in Argentina, and could be an opportunity to make investments in real estate or in any other business, spending half as much as you would have spent, I would say, 5 years ago. Please consider that this is not the case in the mining industry, because mining industry in Argentina is an opportunity, but because of the resources we have, and it's an investment in dollars. But if you think about investing, for example, how I have presented it as Argentina as a service provider, set up a call center in Argentina, maybe it's a great opportunity because you are not expecting to receive funds out from Argentina. What you expect is to grant services from Argentina. So you will not need at present big amounts of investments, and you could make it much more cheaper than investing or having a call center in Canada or in the USA or in any other European expensive country.
Ahmed, what are your thoughts on this?
You have to weigh risk versus profits. But if you want to take the risk and if you adapt to the Argentina as we presented it, you can make a lot out of it.
Yeah, just to add a couple of things from my perspective, I appreciate, and all of us are fully aware that COVID was a big disruption to the usual way of doing business. But with every disruption, it usually also presents some opportunities. So I'm seeing a lot of innovative startups finding those opportunities now that the people are forced to change certain the way they were doing certain things, and they have to abruptly change that. There are a lot of opportunities which now some smart startups are exploiting, and if you are agile and if you are able to recognize those opportunities and if you seize upon those opportunities, it can actually lead to some very significant growth because some of these are unexplored kind of ideas, or ideas where a lot of consumers were not focused on those. And now that if you are in those, like for example, we all saw how post-COVID, a lot of businesses kind of diverted their operations to start making PPE. A lot of governments were offering significant incentives to bring in some manufacturing capability back, and having more priority for locally produced stuff. So there are opportunities there. It is unusual, and these are uncertain times, but opportunities are there. So if you're able to recognize those opportunities, you should definitely capitalize on them.
Perfect. And I know we're gone over our hour and closing into an hour and a half long webinar. So I know everyone probably is extremely busy. So as we wrap things up, Naomi, what are your closing thoughts or words of wisdom for our audience today?
Excuse me?
What are your closing thoughts for everyone who's listening today to our webinar?
Okay. I would emphasize again all what I have presented during the webinar. So saying, although it looks like it's not sure and stable, there are a lot of opportunities in Argentina. And if you get the proper advice and structure, you, in the two industries I have presented, I think you can make profits out of it, which are thinking about having Argentina as a service provider. And again, if you are interested in the mining industry, that is one of the biggest industries which we expect to grow in the next years.
And Ahmed, what are your closing thoughts?
I would say, to close it, there are a lot of opportunities in Argentina, but you need to be careful and to be advised correctly. You have to know how to move in Argentina regarding hyperinflation, devaluation, law and stability, and so on.
So everyone, if you're thinking of going to Argentina, I guess our words of advice is contact Abelovich and Naomi, and she can help guide you in any of those next steps. And Ahmed, what are your closing thoughts and final words for everyone today?
I would like to second what Naomi mentioned. I think it's important there to recognize that there are opportunities outside of our immediate area of focus. Now that we are getting used to this virtual world, we have to appreciate opportunities in other jurisdictions and take advantage of those if we are set up right, and if we have right expertise to help guide us through that process. So I think that's an important advice, and we should keep that in mind.
Perfect. So thank you, everyone, for joining us today. Again, you will be getting a copy of today's webinar along with our interview sessions we recorded on Zeifmans Instagram this morning. If you have any further questions, please feel free to reach out to us directly. The contact details are currently on the slide. And have a wonderful afternoon. Thank you, Naomi, and thank you, Ahmed.
Thank you, and thank all the audience.